Good morning, investors and traders. This is Naim Aslam, Chief Market Analyst at AvaTrade, and welcome to our daily YouTube video. So what we are really looking at in the European markets is the markets are trading to the upside. But before I explain a little bit more about that, it is important for me to explain that anything which we'll be discussing in this particular video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, folks, what is quite important in the European markets is that, yes, the futures were trading to the upside, but now what I'm seeing is the futures slightly tilting to the downside. And that is also the focus for the Dow Jones futures as well. Earlier in the morning, really early in the morning, the futures were trading up and they were up as much as 150 points. But now those futures are down by about 70 points or so. Now, the question is, why are we seeing this particular sell-off, especially the fact that we've seen this massive surge for the US stock market? Well, the first question is, how big the surge was yesterday. Well, yesterday's the single percentage day that in terms of the gain for the US stock market, we've seen the biggest one-day percentage in nearly 4 weeks, or let's just say in nearly a month. Now, of course, that was primarily because of optimism that Donald Trump is coming out of a hospital. And then, of course, investors and traders are still expecting another stimulus package. But the question is that where are we going to move forward from here? There are two important things I kind of wanted to discuss with you with respect to that. Firstly, it is that the S&P and the Dow Jones futures are, of course, they've crossed above the 50-day moving average, and I'm speaking of the daily time frame. But what I'm looking at in terms of a market is that, yes, S&P and the Dow Jones, they are trading higher, but the Nasdaq futures are a lot more softer today. They are not trading up with the same momentum that we have seen for the Dow and for the S&P. And for the record, yesterday, it was the Dow index which was really the leading index. And the reason that I'm saying this is because the distance between the 50-day moving average and the Dow Jones price is quite large as compared to the same sort of analysis when we do for the S&P and, of course, for the Nasdaq index as well. So these are quite important things to keep in mind, because on the outset, what one will do is just go onto the percentage gains and then say, okay, Nasdaq gained another 2.5%. It is definitely the leading index. But no, the devil is always in detail. And that devil, what it tells me is that, yes, we've seen really great gains for the Nasdaq index, but today the Nasdaq is the lagging index. And in fact, yesterday, despite the 2.5% percentage gain, the Nasdaq wasn't the strongest index in comparison to the Dow, because the Dow is well above its 50-day simple moving average, a measure which is considered as quite important among institutional and hedge fund traders. So that is something that we've got to really pay attention to. Finally, what I really wanted to pay attention, or I want you guys to keep an eye on, is gold prices. Yes, currently they are trading above that 1900 mark, but yet the prices are well off the all-time high. Remember, we were talking about the 2100, but earlier I was looking at the fund flows. And so what that told me, the total known gold ETF, the gold ETF funds, what they show is that institutions and hedge fund traders are still very much buying everything with respect to gold prices. That's all for today, and I'll see you guys next time.